Hi, I'm Blain, strategist with Shard Capital. My job's to look at markets, figure out what's going on, and advise on what opportunities and investments are thrown up in the light of what we perceive. And after 35 years working in the markets and finance, I've got to say it's never been more confused than it seems to be at the present. We have stock markets at record highs and bond yields at record lows, which means that they're at higher prices. Every single major financial asset, by which I mean listed stocks and bonds, looks to be overpriced. But despite that, prices are still going up. When central banks, politicians, and economists are all warning that there is still pandemic pain to come, when investors believe that the US and the UK each need another trillion stimulus, and the whole of the UK FTSE index is worth less than Apple, you have to wonder what's going on. It feels like a global recession is just around the corner, yet the banks, the investment banks, are telling investors this is still a good market to buy. Why? Well, the only reason I can think of is that stocks remain so insanely high because the absolute returns on other assets are effectively zero. And that means we are in what is called a financial asset bubble. And when you're looking for someone to blame, just remember this: it's not the market that's stupid, it's participants. Everyone knows that bubbles eventually pop, but for some reason, this time investors seem to think, this time it's different. These are the most dangerous words in finance. What is keeping markets high is the perception that central banks can keep providing liquidity and therefore to continue propping up prices, but that relies on confidence in the central banks to be maintained. Now, what is a market? It's simply the summation of all the multiple views and perceptions that each and every participant has. If these views are stupid, perceptions are false, or the participants happen to believe in unicorns and whatever else they desperately want to believe in, then the market isn't going to go in the right direction. The market doesn't care. It only exists to help you realize mistakes and turn bad ideas into tangible losses. And a bubble market is one where whatever you want to believe forces overcome well-grounded common sense. Even a few stocks that do go to stratospheric levels and go into orbit, eventually that orbit decays because we have gravitational forces like obsolescence and competition. Practically no stock has ever remained in the top 10 for more than a few decades. Creative destruction always ensured that new firms constantly evolve and emerge to meet changing customer demands. And yes, at some point, even Apple will just be something that falls from a tree. Although Apple does look to set to be benefiting from, once lockdown is truly over, the frustrations mean the new iPhone is going to be the most eagerly desired consumer product in history. Some story stocks get a boost from events, and that's particularly true with the current stock market darling Zoom. Its profits are up 3,000% on the back of the pandemic. It's achieved the remarkable accolade of becoming the verb for video meetings. Zoom was just a cottage industry a year ago, making $5 million a year profit. But this quarter, it made $166 million. And yes, that might seem a little bit insignificant to justify its $125 billion market cap. I don't know what it's going to be worth tomorrow. As far as I can make out, the only reason Zoom made such a profit is that companies have been signing off employees to pay for the pro version, which you need for a meeting longer than 45 minutes. But I'm a thrifty Scot, and I already pay Microsoft and have Teams, so why should I be paying for both? That's an example of competition, but the truth is that Zoom is very easy to use, while Teams is frankly a bit of a pain in the you-know-what. Zoom is not a bad company. It's been lucky and was in the right place at the right time with the right product. If the virus had not accelerated adoption of working from home and video conferencing, well, would we have ever heard of it? I dare say it would have struggled, not made any decent money for years, and eventually either vanished or joined the list of so many other tech companies we never really saw reach any potential. But other tech firms do have stories that beguile us, none more so than Tesla. Yes, you knew I was going to end up talking about Tesla. When Elon tweeted his stock price was too high a few weeks ago, well, now we know what he meant. The stock split was a brilliant idea. It enables all his legions of Robinhood fanboys to buy into the suddenly much cheaper 5-for-1 price. The fanboys get the opportunity to own less of the firm for more. And this week, Tesla managed to raise $5 billion through a new stock sale. The big holders for his Tesla do seem to be getting nervous. Bailey Gifford has owned about 6% of the firm, but it has been selling. Other big institutions have also been taking profits. Yet it's the most actively traded stock on Robinhood. Now, I'm clearly an idiot, everyone knows that, because last year I said sell Tesla because it's a bubble and it's overvalued. The market has conclusively demonstrated by its gains this year how wrong I was. I'm now certain that Tesla will survive. It's not going to implode. They make good cars and people buy them. My problem is I just wonder what Tesla is actually really worth. I just don't buy into the narrative that it is worth its current valuation. Reading through some recent stuff on Tesla, it was all about the author, who said it was overvalued, taking flack. And many of the comments said, Battery Day, which is coming up on September the 22nd, will mean that the stock goes even higher. Now, I'm intrigued, so I tried to find out what Tesla can possibly announce in terms of new battery technology, which is going to greatly increase its profits and push Tesla even further ahead of its competition, which is growing, in terms of other electric vehicle makers. Now, it actually turns out there are an awful lot of positive things that Tesla could be bragging about come Battery Day. We're expecting Elon to do a Steve Jobs on speed type presentation. It's going to stun everyone into a buying frenzy. They might be able to announce a way of lightening the batteries, increasing their power, which will increase the range. They may be close to announcing a 1 million mile battery that won't need replacing. There is talk of a terafactory, 25 times the size of the current gigafactories. There is even talk about clever things with silicon anodes. And they might be able to cut the cost of the battery, which will therefore improve the bottom line and margins they make on their cars and people they license the tech to. These are all great steps forward, but they're not reinvention or real innovation. They are laudable tech projects that will improve the possibility. But I still struggle to value 2% market share, which is Tesla had, but 40% of the total global auto cap. Global autos made 105 billion last year. Tesla made less than $1 billion. So it would need to make somewhere in the region of 20 million cars to justify its pricing. And all the other stuff that Tesla has just doesn't seem to equate to that. Or you could argue that Tesla has 19%, well, let's call it 20%, of the electric vehicle market, and EVs will increase to 40% of auto sales within a few years. But that would still mean that Tesla has to increase its current 500,000 to 6 million cars a year to even start to justify the current premium. You can believe whatever you want to about the possibilities of Tesla. It's the summation of the market, as I said earlier, that's made it the most valuable auto company. And clearly many people expect it's going to go higher. Jolly good. Enjoy the ride. They are great cars. But I'm going to wait, because I suspect that Battery Day is just more hype. I'm going to stick to the perspective that I've evolved over the last few months as I've learned about batteries, that Tesla's battery secret sauce is basically just 50-year-old lithium-ion tech that's vulnerable to future alternatives, which might be the hydrogen economy, or it might be entirely new battery tech like carbon ion. I'm going to discount this talk of a terafactory on the basis that 28 times the gigafactory will need about 300% of current supply. And also, lithium is a filthy chemical. It doesn't meet any ESG targets. it's not clean, whereas the hydrogen economy could potentially be a clean economy. I also remain unconvinced about all the trillions of miles of data that Tesla has acquired from every car it's ever built. I don't think that's going to mean that Tesla owners suddenly find themselves with high-earning self-drive taxi assets, and I'm not sure about autonomous driving. Elon is always promising us these things are coming tomorrow, or more likely the day after tomorrow, and that never arrives. Look, my skepticism on Tesla is well known, and I get hatred on email and Twitter from being, trolled as they call it. But I can't understand why Tesla fans are so supportive. And I've been trying to think about that, and I'd go as far as to suggest that Tesla is a product of disappointment and frustration, which has led to the rise of bubble stocks. And we need to think about what the underlying philosophy here is. It's hopes that Western corporate exceptionalism and tech is going to lead us into a new golden age, but the reality sadly is different. If you look at the corporate sector, heavily indebted firms are not delivering quantity or productivity or wealth. There's a massive disconnect between living standards and the financial rape that's going on in the middle classes versus the owner-manager classes who are getting richer and richer. There is still a belief that capitalism will work, but we know that it's under pressure because of the way that QE has distorted markets. The result is that dissatisfied workers, including many investment managers, are looking for magic. As returns plummet due to falling interest rates and declining risk-return numbers, they're investing their hopes and dreams of wealth in any likely-sounding project. The result is that good ideas, like EVs or video conferencing or promising pharmaceuticals to combat the virus, and even things like WeWork, get hyped beyond all common sense. America looks at flamboyant entrepreneurs like they are rock stars, and they ascribe all kinds of God-given wisdom and financial acumen to them. Buyers invest their hopes and dreams in flawed companies and characters because they don't want to believe that the American corporate sector has become flabby, its arteries are clogged with debt, and that many are little more than personal piggy banks for the management to ramp up through stock buybacks. They want to believe that entrepreneurs are great visionaries who have the brains and energy to restore American corporate greatness and exceptionalism. And I think that's what's behind the current bubble markets. And that's going to lead to disappointment. Some entrepreneurs know how to milk that feeling very effectively. And I think you know what stock I'm talking about. Anyway, that's it for this week. Thank you very much.